Hi, today we're describing a simple system using Bollinger Bands and the moving average. This is a sample of the equity that we got at the end of our backtest. We can see 250% in return on the S&P 500 stock. No major drawdowns, different positive returns on different markets. And the equity final is also the equity peak, which is amazing, and a winning rate of around 91%, mainly due to the fact that this system is very selective. And I also managed to get 100% win rate in some cases by tweaking the system's parameter. This is not a scam or some kind of bluff. Those who have been following this channel know already that we only do things through automated coding and the results are displayed just as they are, even when things are not going our way. Put simply, this is a promising strategy. You can even download the Python code and the data from the link in the description and check the details on your own. There's no mystery in numbers. We run the code and we get what is the real outcome of every single strategy we try on this channel. So since it's all coded in Python, we will describe all the details, the pitfalls of the system, and we will investigate its potential, trying to maximize our profit. So why testing the Rayner Teo Bollinger Band strategy? Well, first of all, someone from the comments section proposed this. I went to see it. I got attracted by the 1689% return, got me curious, and it was also tested by another YouTube data scientist, algorithmic, that I followed some of his work, which I find interesting as well. So all of this led me to try things the way we do it here on this channel. We will use the daily time frame and the 200 moving average to decide the trend. If candles are trading above the curve of the moving average, then we are in an uptrend, and if the candles are trading below the curve, we consider we have a downtrend. Here it's important to know that numerically this is checked by testing if we have, let's say, 5 or 6 consecutive candles trading above or below the curve. Of course, this number can be modified as it's left as a variable in the code. Second, we have the Bollinger Band curves, the length 20 and the standard deviation set to 2.5, as described by Rayner Teo himself on his channel. So if we have an uptrend, we're looking for buying positions. We will wait for a candle closing below the lower curve of the Bollinger curves, which is the case right here. For example, this red curve is closing below the lowest curve of the Bollinger Band, and we are in an uptrend because these candles were trading above this moving average curve. And the trick is that when this happens, we will not enter a trade yet. Instead, we will put an order at 3% distance from the current closing price. Since we are looking for a buying position in this example, we are putting a buying order 3% below the price of the closing signal candle, which is here. So this is represented by those purple points that we can see on our chart. These are positioned at 3% distance from the closing price of the signal candle. And the reason we do this is that we are trying to buy at the lowest possible price that we can get on the market. In the opposite direction, since we are looking for a selling position when the candles are trading below the moving average curve, we're looking for a candle closing above the highest or the high curve of the Bollinger Bands, and in which case we are going to place an order in 3% distance above the closing price of the signal candle. Then if the order is completed and it's transformed into an open trade on the market, we're going to close the trade when the 2 days RSI crosses the 50% threshold, or after 10 days in the opposite case, meaning if the first condition on the RSI is not fulfilled, then we don't leave our trade open indefinitely on the market. We will wait maximum 10 days and then we close our position. So remember, for a buying position, for a buying trade, we are looking for an RSI crossing from bottom to top above the 50% threshold, and the opposite case, when we have a selling position, we're looking for an RSI that is going below the 50% threshold to close the trade. Okay, before moving on to the coding part, there are 4 crucial details I would like to mention, and these will be solved while we are writing our code. First one is, how long do we keep the order untraded on the market? Just for the next day, or we can wait a couple more days to increase the number of the total trades that we will get at the end, because in principle this is a very selective system and we don't expect to have a high number of trades on the daily time frame. Since we are coding, we will leave this as a variable in our code so we can experiment on if needed. The second question is, what happens when you have 2 consecutive orders or signals? Do we keep both, or does the new order replace the last untraded order? In this case, I prefer to go for the second option, meaning only one order is allowed. and it is the latest or the most recent one. So in other words, if we have one signal and then we have a second signal, like here in this example, the previous signal is erased and we only keep the most recent order on the market. Can parameters be optimized for higher returns in the system? Sure they can, and this is one of the main advantages of algorithms. We can simply modify the value of one variable, run the code, and see the results as easy as this. Last point, how many open trades are allowed at the same time? Shall we put another order on the market while a trade is still opened? Or I would vote for no for the moment. We just want to keep things simple and evaluate the system without cluttering our chart with so many overlapping trades. I just wanted to mention these details so when we are writing our code, you would know and understand all the related parts. And I think at this stage, we are ready to carry out the coding part and the testing in Python. Okay, so this is our Jupyter Notebook file. I'm starting by downloading or reading data. I'm using pandas. I'm loading a data frame, the SPY US dollar. This is the S&P 500 related stock market, the daily charts, and going from 2017, the 16th of February 2017 up to 21 of May 2022. Later on, we are going to experiment on different stocks and for different periods of time. But for now, we're starting with the first example. And here I'm cleaning the candles where we don't have any market movements. So this is where the high of the candle is equal to the low of the candle. I'm removing these from my data frame. I'm resetting the index and I'm printing the first part of the data frame, just the head of the data frame, to check how my data looks like. So I'm going to run this part. This is what we have for the moment. Then I'm importing pandas_ta as technical analysis. I'm computing the EMA, the exponential moving average, or the simple moving average. Actually, it depends. You simply have to replace either SMA or EMA here, and you would be using the simple moving average or the exponential moving average. In this case, I tried both. It doesn't make any difference for our system on the daily time frame. You might want to consider, if you are moving on to lower time frames like the hourly time frame or the 30 minutes time frame, you might want to consider changing this and checking if it does affect your results. Then I'm computing the RSI, putting this into our data frame as well. The length is 2, remember, and we're using the moving average 200. So these are the details to be taken into account. Then the Bollinger Bands are also computed with length equal 20 and the standard deviation of 2.5. I'm adding these Bollinger Bands columns into our data frame using the join function, and we're dropping the NA, meaning the empty values, from our data frame at this stage, because remember, for the moving average, for example, you need at least 200 rows to get the moving average, the correct value, and before that you don't have real numerical values, and these will be affecting your graphs and whatever you will be doing later on, so we don't need these. Then I'm resetting the index since we have erased some of the rows in our data frame, and I'm printing some part of the data frame, just the beginning, just to see how things look like, so things are working properly. Then I'm using a function that we have described in previous videos. This is the add moving average signal function. It takes a data frame and the number of candles to consider, and this is where the moving average signal is computed, meaning if we have a certain number of back candles above or below the moving average curve, in which case we are deciding if it's an uptrend or a downtrend. And I'm calling this function using my data frame, the fspy, and the number of back candles is equal to 6. In other words, if we have 6 back candles above or below moving average curve, then we decide if we have an uptrend or a downtrend. You might want to change this value. It's not a rule. 6 is simply a number that I'm using randomly like this. You can use 5 or 10 depending also on the time frame you are using, because if we are on the daily time frame, 6 candles, meaning the price has been trading above the 200 EMA for 6 consecutive days, I think we can consider that it's an uptrend or a downtrend if the price is below the curve. Then we reach an interesting cell. This is where we're adding a new function called add orders limit. It takes 2 parameters, the data frame we would like to analyze and the percent. The percent are the 3% distance we have described in the algorithm. So it's either we use 3% or we put the order at 2% or 1% or even 0%, meaning at the closing price of the signal candle. I left this as a parameter so we can also experiment on and change it according to which currency we are trading and whatever data frame as well. So the way we are doing this is that we're checking if for each row, for each day, if we have an EMA signal equal to 2, which means we have an uptrend, the candles are trading above the moving average curve, and at the same time the closing price of the current candle, the current day, is below the lower Bollinger Band. We are adding a new column, a new list called order signal of the current candle, of the current row or the current day, that is equal to DF close I, meaning the closing price of today, minus the closing price of today times the percent. And in the opposite case, when we have a downtrend, meaning the EMA signal is equal to 1, and at the same time the closing price of the current candle is above the higher curve, we have a selling signal or a selling order, and we're going to add the order value, which is equal to the closing price of today plus 3% of this particular closing price. So I'm using this function to add a new column which is called order signal to the data frame we are using, and I'm using 3% just as described by Rayner Teo himself. We're sticking to the initial parameters, the original parameters for the moment, and we can try to modify these later on. And now, just to verify everything, I'm printing the rows where we have an order signal that is different than 0, meaning when we have orders. So on these days we have different orders. It can be buying or selling orders, and if I want to check the values, the order actually has a position, so it's relative to the price. So we have $256. This is the unit we are working in. This is one order. It's a buying order at this point on this day, and if I compare the $256 to the closing price, which is $264, we can notice that it's 3% below this particular closing price. And we can visualize our data and the curves. So I'm just taking a small slice of the data. We can't plot everything, it would be too cluttered. So I'm not going to describe these, as these two cells have been used and described in the previous videos so many times on this channel. If you are interested in those, you can go back to previous videos. But anyway, this is the result. We can have the charts here. We see the EMA in orange, the curve of the moving average, and the two Bollinger Bands. I only plotted the high and the low because the middle curve and other parameters are not of interest for the system. And we have the purple points where we have our signals or our orders. We can zoom in and verify that in this case we are trading above the moving average curve, so we are looking for buying positions, and these two candles closed below the lowest part or the lowest curve of the Bollinger Bands. We have two buying orders at these particular positions here, meaning the closing price of this candle minus 3%. Remember that this is a scenario where we're only keeping the latest orders, meaning this previous order is going to be erased because of this one. So now we will use a signal function just to pass our order signal values into our strategy, and I'm using the backtesting.py package. So also for this video, I'm not going to go through the details how this package works. It's out of the scope of this video. We're just testing the strategy here. But what's important is this part. So this is where we are testing if the order has been put on the market for more than, let's say, a certain number of days. Here it's 5 days. So after 5 days, if the order is not traded, we're going to erase it. We're going to cancel it. And the way we can do this is by checking the current time minus the time where the order was created. And if this difference is greater than 5 or a certain number of days, then we can cancel the order and pop the last time. This is a list called order time where I'm going to append order creation times every time I'm creating an order. I'm putting the times of creation of orders into this list just to keep them in memory, but then when I'm erasing the order, I'm also erasing the corresponding time. Then I'm checking if I have open trades. So if the length of trades is positive, meaning I have open trades on the market, I'm going to check if the current time, meaning the trade creation time or trade entry time, is greater or equal than 10. So we have an open trade for more than 10 days on the market. We have to close the trade no matter what, if it's a winning trade or a losing trade. Also, if a trade is long, meaning if it's a buying position trade, and at the same time we have the current RSI that is greater or equal than 50%, in which case we are closing the trade. And if we have a selling or a short trade, and also the RSI goes below 50%, we're going to close the trade. So these are the conditions where we are closing our trades on the market. And this is the condition where we are closing the orders that we put on the market. Next, I'm combining these three conditions just to open a buying position. So if we have a signal that is different than 0, which means we have an order signal, either buying or selling signal, and at the same time the trades number is equal to 0, because remember, we're allowing only one trade that is opened at a time. So we need to have no trades if we want to open a new trade. And at the same time, the moving average signal is equal to 2, because it's a buying position that we are working on here. So I'm canceling, in this case, all the previous orders, because I have a new order that I have reached at this point. Remember that we are keeping only the most recent orders on the market. And now I'm using the buy function from the backtesting.py package. The stop loss doesn't have to be here. I simply put a dummy value. It doesn't mean anything. It's the signal divided by 2, so it's the closing price divided by 2. It's never going to be reached this way, but anyway, I put it because it's a parameter, and the limit in this case is going to be equal to the signal, which is already calculated and put into our data frame. Remember that these are the 3% distance price below or above the closing price of the signal candle, and this is why we have to include the limit parameter here. And the size is going to be the self.initial size. It's 50% of our equity for the moment. And this is how we are putting a buying order on the market. At the same time, I need to keep the time I'm creating this order into memory. So I'm appending into the list called order time, the creation time of the current order. In the other case, where I also have a signal different than 0, and at the same time I don't have any open trades, but also I have a moving average signal that is equal to 1, which means we are trading below the moving average curve. So we are looking for a selling position. In this case, we have to do exactly the same as we have done for buying positions. It means we are canceling all the previous orders, taking only the most recent one, and passing a selling order with a limit that is equal to the current signal value, which is the closing price plus the 3% of price difference, and for the same size of the trade. At the same time, also, we are adding the order time into our order time list. So these are the details of the code. I'm running a backtest on the data frame, starting with $10,000 of cash with a margin 1/10, meaning leverage of 1 to 10. No commission for the moment, just to compare the system to the previous systems, disregarding the commissions. We're adding the commission only if the system proves that it's a winning strategy. And when we run this, we have 17% of return on the data frame that we have included. 100% win rate, but it doesn't mean anything because we only succeeded with 2 trades. Remember, this is a very selective system. So as you can see, it's not many trades, only 2 trades, but these were winning trades. We can access the trades list using the stat._trades just to check how many trades we have and the details of every trade. So now let's go back and try to apply this system on a longer period of time. So I'm going to comment this line, and I'm going to use the Y-Finance package to download data from 2011 to 2021. So this is 10 years of data. I'm going to run this, going to download the data, and we have to go through the whole notebook again, so just to see if things are working. And now we've got 14% of return in total. So we can increase the number of the total trades that we are obtaining by decreasing the conditions that we are using in the model, so making the model less selective. And here I removed the 3% distance that we were putting for the orders on the market. And when we run this simulation, we get 174% in return. So we already have something more. We have more trades. The number of trades increased. We can see here the green trades are the winning trades that we can see all over the chart. And the list of trades is this one. So we can access the list of trades. As we can see, we have in total 22 trades over around 10 years. So in total, it's around 2 trades per year on average. Statistics are the following. We have around 91% of win rate. And in total, we have 23 trades. The maximum drawdown is 28%, which is not ideal. And the average drawdown percentage is -5%. The interesting part is that we have a maximum trade duration of 5 days, so 5 candles. This is good. And the average trade duration is around 3 days. We can increase our return by increasing the size of the trades that we are passing, the size of the orders. So if I put 99% of the equity, in this case, we have a return of 600%. So we can see that it's something that can be increased while playing on the parameters that we are using for the model. We can take a look at the chart and we can see that most of our trades are winning trades. So we have one losing trade here and another big losing trade right here. This is the maximum drawdown. This is something apparently exceptional that happened once every 10 years. At the same time, we see that the equity is constantly increasing, which is a very good sign. This system has potential. And if we look at the chart, actually, we have nearly perfect entry points. I don't think traders can be doing better in this case. So we can see here, however, the exit points are not always squeezing the most out of each trade. We can see that sometimes the model is exiting too early. This can be corrected maybe by adding a trailing stop or simply increasing the RSI values for which you want to exit the trade. Anyway, we still didn't find the 1689% in returns over 10 years, but there are a lot of details that we are missing regarding this trading system. For example, when the original trader started testing the system, what was the margin or the leverage that was used, and what was the lot size they were trading with. So many details can play on your percentage of return at the end. We can try to run this on the same stock market like the Russell 1000 that was used by the original trader. I'm going to run everything again and we'll see what we will get as a result. So we have 479% in return at this point. And remember that we just discarded the 3% distance for the orders to be put between the closing price and the order price. Still, we are not getting those 1689%. I'm not saying it's a bad system. Actually, it's a very good strategy that I'm going to investigate even further. However, it's very hard to repeat the same results that others are getting, especially if you are using different methods. I'm going to stop here for this video. However, I will be investigating more and further regarding the details and the parameters that we have used in this model. I believe we can try this on a lower time frame to increase the number of trades and maybe find a better approach for the exit strategy. If you have any ideas, don't hesitate, just drop a comment below. As you can see, this is a really high winning rate system. And don't forget to support the channel by liking and subscribing. Thank you for staying that long. Until our next video, trade safe and see you next time.